The market has seemed to make a strong recovery since the extreme volatility we witnessed in April. Whether or not you believe the implementation of tariffs was done well or that it was botched, the fact is the S&P 500 went through some extreme swings. And since the low of 4,982.77 on April 8th, the S&P has returned 19.3%. And with Moody's lowering the credit rating of the United States, we may witness more volatility this coming week. But however the rest of 2025 goes in the market, we received some important filings this past week. It is 13F season, and the super investors were making moves. Welcome to The Quality Investor. The Mag 7 again dominated the top 5 buys of the first quarter in 2025. But there are a few interesting purchases creeping into the top 10. As far as sells, it was the usual mega cap suspects, and we'll go into those in a bit. But for the super investors I want to review today, there was one major theme that emerged: selling, and lots of it. We saw that theme in Q4 of 2024 as well, and I speculated then that these investors were freeing up capital to do a little shopping in this first quarter. Well, super investors aren't super investors without reason. Trump had been advertising for weeks that tariffs were coming, and it is quite possible these investors, in their long experience, knew to prepare for a market downturn and followed the timeless investing adage of buy low, sell high. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. We will have to wait until next quarter for the buying part, but the S&P 500 was above 6,000 through late February. So there was plenty of time to sell early in the year in order to free capital for better opportunities down the road. Regardless, the investors we are looking at today are some of my personal favorites, and those who watch my previous super investor videos know I admire the portfolios of Terry Smith, Chuck Akre, and Chris Hohn. But today we are looking at a new one as well. It is Valley Forge Capital Management. It is run by Dev Kantesaria and has a value of $4.4 billion. And what I like about this portfolio is its concentration and simplicity. We'll get into that a little bit more, but first, what were the top buys and sells of the quarter? Here is a list of the top buys in the quarter. There are 884 buys total in this quarter, and Microsoft was the top buy of them all. And like I said, the top 5 was dominated by the Mag 7. You also have Meta Platforms at number 2. NVIDIA, Amazon, and Alphabet, or Google, tied for the number 4 spot. And why not for Microsoft? After closing at a 2025 high, well, at the time, on January 28th of $447.20, Microsoft started trending sharply downwards. But by the end of March, Microsoft was down to $375.39. I myself made a couple large purchases in Microsoft in this quarter once it fell below 400. And of course, starting the year out pretty high for NVIDIA at $138, it too trended sharply downward by the end of March to just above $100. So it was a good time to buy here as well. And of course, we all know about Google's troubles they've had in 2025. It has certainly been out of favor in the market, and I believe has been a very good buy throughout the entire year so far. But it's the names that make up the rest of the top 10 that I think are really interesting. These are not typical stocks you see in the super investor buy list. Wesco International, which is an electrical distribution services company based out of Pittsburgh. Texas Instruments, Uber, which was actually a big buy of Bill Ackman. Flutter Entertainment, which is a sports betting and gambling business. And Lennar Corp, which builds homes. And just outside the top 10, we have Dollar General, who's very much had a troubling last year or so, down 32% on a one-year basis, but year to date is actually up almost 24%, proving to be a good bet so far for these super investors. So again, the super investors are finding value in names that aren't necessarily household for the retail lot, with the exception of Uber and possibly Texas Instruments. But to me, this demonstrates that the Mag 7 is still the best place to park your money in a reliable and safe place if you want solid growth. And it seems like some of the other top names in the S&P 500 might be at stretched valuations, at least for the super investors. But to me, Flutter Entertainment is interesting because I view sports and gambling businesses as a bit of a commodity. I don't see the difference between it and, say, DraftKings. Flutter Entertainment, of course, is the parent to FanDuel. And you also have names like Penn Entertainment, MGM Sports Betting, and Caesars. Again, they're so fiercely competitive. I don't see how a solid competitive advantage can be created. So that's something I typically stay away from. As far as sells go, however, it is the typical mega cap suspects that we see: Google, Visa, Microsoft, Amazon, Meta, Berkshire, and then a few of the banks. Remember, they didn't buy the banks, but they were selling banks: Wells Fargo, JP Morgan Chase, Bank of America. But of course, we also had some sells here of what I believe are pretty big dogs right now. Walt Disney, although they seem to be recovering a little bit. Starbucks, which cannot seem to find its way at this moment. And also United Health Group. Now, this was in Q1. This was prior to the complete cratering of the stock that we've seen in Q2. But Bill Ackman was making waves regarding the fraud of the Medicare from United Health Group early in Q1 around February. But a lot of these sells are stocks that super investors typically have held for a long time and are probably taking profits. But on to the super investors themselves. First, we have Terry Smith of Fundsmith. Terry Smith has underperformed the S&P 500 on a one-year basis, returning 10% versus the S&P 500's 12% return. And like I said, the theme was selling. And a lot of his portfolio was dominated by selling his top positions. Meta, Microsoft, and Visa all had 10+% reductions in their portfolio positions. But it looks like he was freeing up some capital in order to make some pretty big buys. He added 1,000% of his position to Zoetis, a stock that he has talked about a lot before and very much likes. I also like too, but have always found it to be at a very stretched valuation. His total purchase of Zoetis amounted to about $381 million. So a very significant addition for this portfolio, as well as Texas Instruments. He bought just over 1 million shares in Texas Instruments, a significant $184 million increase in the position. And he also bought into it. Now, this is a stock that I am very high on myself. And not only that, I did a deep dive into it earlier this year and started adding to my position when it was under $600. My cost basis into it is just over $587. Some other significant movements in the portfolio: he added Paycom and Qualys, and he did make some large reductions in Equifax, Home Depot, and MasterCard, although they're fairly small in relation to the size of the entire portfolio, so not very significant in the grand scheme of things. But what doesn't show up on this list shows up at the bottom of this list. He sold out completely of his Pepsi holding, which, depending at the price he sold, made up over $800 million of his portfolio. Pepsi, of course, has been on the downswing as of late. On a one-year basis, Pepsi is down 26.8%, while down 12% year-to-date. Pepsi has certainly faced some issues in terms of pricing and volume. I haven't looked too much into what's going on at Pepsi. I know it's a very popular stock with the dividend crowd. However, if any of you know, please comment below with why Pepsi has been so out of favor. Next up, we have Chuck Akre, Akre Capital Management. One of my favorite portfolios, highly concentrated and focused on the best of the best. Businesses that he believes have a high return on equity and sustainable and compounding free cash flow. Very much in line with my own investment philosophy, but he did a lot of selling as well, selling out of MasterCard, Moody's, KKR, and a huge reduction in his American Tower position. But Chuck Akre is certainly somebody that knows what he's doing. His one-year performance is 18.2%, 6% better than the S&P 500 on a one-year basis. Like I mentioned, the S&P is at 12% on a one-year basis. But his two most significant buys in this quarter are CCC Intelligent Solutions, which is a fairly interesting business. They are a SaaS business, or software as a service, that provides solutions for the property and casualty insurance industry. They're fairly small at a $6 billion market cap, so not a large cap business, so it might be an interesting one to look into. And his other significant buy was Airbnb, another business that I hold in my portfolio and also am very bullish on for the future. Again, it looks like that valuations are pretty high, especially for businesses like MasterCard, Moody's, and Visa. And he was selling possibly to get capital for the CCC purchase, or he believes there's some other opportunities out there, and we will know in the next quarter or two. Next, we're looking at Chris Hone of TCI Fund Management, another highly concentrated portfolios and one of my favorite portfolios. He had one really significant purchase, Microsoft. He purchased 3.3 million shares of Microsoft, and if that reported price is true in any way at $375.39, that was a $1.2 billion addition to the portfolio. And it looks like that was supported by his sells here, most notably Google. His two sales of Google, GOOG and GOOGL, combined gave him $700 million of capital, and a bulk of the rest of that coming from the sale of Canadian National Railway. Chris Hone's one-year performance is at 14.9%, so just slightly above the 12% of the S&P 500. But I do think the Google sale is interesting. I believe it's one of the best deals in the market, especially one of the best deals of the Mag 7 at the moment, up until Google gets about $200 a share again. But perhaps he saw a lot more value in Microsoft going forward. And honestly, once Microsoft gets below 400, to me, it's a screaming buy. But again, one of the best portfolios out there, just filled with incredible world-class businesses with incredibly strong economic moats. And last, we have Valley Forge Capital Management. This is the first time I am looking at this portfolio in this Super Investor series, and I absolutely love it. It is highly concentrated, 9 total stocks. An investment philosophy right in line with my own. And honestly, every stock in here is an absolute winner in every way, a monopoly in their respective industry, or duopoly at worst. Valley Forge Capital Management has done incredible in the past year, returning 23.7%. And on a 3-year annualized basis, it has returned 65% a year. This, of course, is Dev Kantasaria's hedge fund, and each one of these stocks are stocks I would love to have in my own portfolio. I already own Visa, Intuit, and MSCI, but FICO is a stock I would love to add, but at $2,200 is a little bit too high for my tastes. I would like to see it come down to at least $1,600. S&P Global, another stock I would love to add, $522 is a bit much for me. And of course, I just did a deep dive on ASML a few weeks ago. And at the time, it was trading at, I believe, $620 when I did it. And has since shot up to $748.10. But all in all, nothing too significant in terms of activity in this quarter. He sold a little bit of his FICO but did reduce his Intuit position by 1 quarter. Still though, I wanted to look at this portfolio just because of how concentrated it is and how well it has performed over the last few years. And this is what I aspire to be in my own portfolio. Hopefully I can get to a portfolio as concentrated, but with businesses as high as quality as this one for the quality investor. So that is my look at some super investors. I actually want to do another super investor video possibly next week, reviewing a few more of them. I always think it's very interesting to take a look at their portfolios because it helps give me ideas. I hope that you can get some ideas from their portfolios as well. These guys are the best of the best, so it's always good to learn from those at the top of their industry. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.